Awesome. Welcome in, everybody. Welcome to Collective's webinar. Just giving everyone a couple more minutes to kind of filter in and settle in, but welcome. If you guys want to just put in the chat where you're joining from, and if you want to put your job title or like your business, what you do, that would be great. Hi. Okay, so we got some other East Coast people. Hopefully you guys aren't dying to the heat like we are down here in Florida. Looks like we got a couple Floridians here too. I'm on the East Coast of Florida. It's very hot, very humid. All right, awesome. Let's see, just gonna give probably one more minute or so. Minnesota. California, awesome. Be there next week. Seattle, amazing. So we've got a pretty good group from all over the place. So it's been a couple minutes. I think we'll probably just go ahead and get started. So welcome again to Collective's webinar. My name's Elizabeth. I'm one of the business advisors here at Collective. I've been here for almost 3 years now. And prior to this, I worked in tax and finance. So I've worked in that field pretty much my entire adult life. I am a tax professional. I'm an enrolled agent. So that just means I have my credentials through the IRS. And prior to this, I specialized working in tax resolution. So I worked primarily with small business owners, just kind of helping them if they owed a liability, trying to negotiate like a fair and reasonable settlement for them. Also audit representation. So that's kind of my background. But I love working with self-employed individuals. That's why I'm so passionate about what we do here at Collective. So our agenda for today is going to be going over self-employed tax basics and why they're so expensive when you're self-employed. What exactly is an S Corp and how is it going to help me save money? Why should I start now? How do I start? And then any questions you guys have, I will answer at the end of the webinar. So just a couple quick housekeeping pieces. Just please make sure that any questions you have, you're typing them into the Q&A box and not the chat. We just want to make sure that we can be organized and we're not going to miss answering any of your questions. So if you please put them in the Q&A, I'll make sure to get to them after the presentation. Also, if you stick around until the end, if you are thinking of scheduling a call with us or you think Collective sounds interesting to you, we will have a discount code for you. So stick around for that. So let's get into it. What is Collective? Who are we? We are the first all-in-one online financial platform designed for self-employed people. What does that mean when we say we're an all-in-one financial platform? So when you're self-employed, there's a lot going on. This little picture here, this smiley face, that's just you happily running your business. all these little bubbles are just kind of popping up that you think of like, okay, I set up my business. How do I do my bookkeeping? How do I manage estimated taxes? What about payroll? Do I need to be on payroll? What about retirement benefits, compliance, bookkeeping? What software should I use? It can be a little bit daunting to try to manage all of these things on your own, in addition to running your actual business. And then these pesky little bubbles become even more pesky when it's time to make an important financial decision. And you realize that not everything in your setup is working cohesively together to help with your financial accuracy. So you've got to worry about business taxes and personal taxes. How are my business taxes going to affect my personal taxes? Oh my gosh, I haven't paid my estimated taxes. I forgot about all of that. And I'm behind on my bookkeeping. I haven't been paying myself on payroll. Do I need to do that? I haven't set anything aside for retirement. How do I get advice on that or on healthcare? There's just a lot going on. This is what we mean by collective is like a one-stop shop. We keep everything really organized. So we make sure that all those pesky bubbles are working together in a cohesive platform that is going to take care of all of those moving parts for you. So at Collective, and we'll go over this more later on, but just to kind of give you a little bit of an idea of what we help with, we handle not only the business setup, we handle bookkeeping for you on an ongoing basis, payroll. You get advice from our financial experts here. We handle estimated taxes. We can help with retirement benefits and planning. Compliance is a big piece for us. That's very important. And then, of course, business taxes as well. So I want to know, what are you struggling most with right now? Would it be just like setting up the business, taxes, bookkeeping, financial advice? What keeps you up at night? Okay, so thank you guys for answering that poll. Let's look at some self-employed tax basics. So as you know, there's a bunch of different types of structures, business structures. The first one we're going to look at, and really what we're going to focus on, would be pass-through tax structures. What defines a pass-through structure? It would be a business that doesn't pay income tax. All of the profits pass through to the owner's individual tax return. Taxes are paid on the profit that is passed through, and they're not subject to double taxation. Now, of course, when we refer to double taxation, that's more so along the lines of like a C corporation, where the business itself pays tax on the profit. So they pay corporate income tax. And then they're also taxed, the owners are also taxed on the shareholder level as well. So you're paying tax twice. With a pass-through structure, double taxation does not apply. Yay. So what is an example of a pass-through structure? It would be a sole proprietorship, a partnership, an LLC, whether it's a single or multi-member LLC, and an S Corp is actually a pass-through structure as well. So again, this just means that the businesses themselves don't pay tax on the profit. Everything just flows through to the owner's tax return. Now, what type of taxes do self-employed people have to pay? Income tax. Everybody has to pay income tax. Uncle Sam just won't have it any other way. And income tax is generally what you think of when people talk about taxes. Now, everyone kind of has their own marginal tax rate in terms of income tax, but most of us are going to be somewhere between 20% and 37%. And that's where that tax bracket comes into play. I'm sure you've heard that term. On top of your income tax, your ordinary income tax rate, somewhere between that 20% and 37%, you're also paying an additional flat rate of 15.3% in self-employment tax. And self-employment tax is just those FICA taxes. So they go towards Social Security and Medicare. When you're a W-2 employee, like myself, I am a W-2 employee of Collective. I'm paying half of those taxes. So the 15.3% still applies to me, but I only pay 7.65% and Collective pays the other 7.65%. When you're self-employed, you have no benevolent employer to pay the other 7.65%. So you are stuck paying the whole enchilada, that whole 15.3%. So why self-employed taxes are so expensive? That's basically the reason. This is just kind of visual representation of what we just went over. So let's just say this is me, this is Elizabeth, working for Collective. Collective is paying $7,500 of my total $1,500 tax bill. Collective pays $7,500, I pay $7,500. When you're self-employed, again, you're stuck paying the whole $15,000. Now, how does the money work? How does it flow through your business? So when you're a sole proprietor or a single member LLC, this is just kind of how everything flows. You get your revenue, and that's the money that you earn, the total amount for providing your goods and services. Subtract any deductible business expenses. So if you've got, your business use of your home, some subscriptions, mileage, if you're driving for work, you subtract all of that, and then you arrive at your net income. If it's positive, that is a profit. If it's negative, that's going to be a loss. That profit or loss is going to flow through to your individual tax return. So the business profit, as you can see here, flows through, and that is what you pay tax on. You're not paying tax on the total revenue. You're paying tax on the profit. So the profit then flows through to your tax return. You then pay that 15.3% in self-employment tax on the profit. And then you pay income tax. And again, that's at your ordinary income tax rate. You take your business profits plus all other income. So it considers all household income, especially if you're filing joint with a spouse. It's going to take into consideration their income as well. Say this business is your side hustle and you've got a main gig that's W-2. It's going to take into that consideration as well to determine what your income tax percentage is going to be. So it's business profits plus all other income minus any personal adjustments, minus the standard deduction, or if you itemize your deductions, and then you pay your income tax on that. So what is an S Corp? Let's talk legal structures before we really get into that, because that is an integral part of S Corp ownership. So entities are formed in a state with the Secretary of State. Entities are generally required by the state to form what's called an annual report. And that just kind of lets the state know what's going on with the entity. Like, is it operational? Who's operating it? What kind of business are you doing? This is totally different from your tax return that you file. The formation and information returns are done with the Secretary of State. And this is, again, it's a totally different group most of the time than the taxing authority. So this is just, think of this as just formation and maintaining your LLC. This is different than who you typically would file your taxes with on the state level. An S Corp is not actually a legal entity. It is what's called a tax election. So the IRS assigns every business structure a default tax treatment, which is just a fancy way of saying that the IRS is going to decide how your business is taxed. Single member LLCs are automatically taxed the same as sole proprietors unless they ask otherwise. So when you form a single member LLC, you get your liability protection with that business, but for tax purposes, the default tax treatment is what's called a disregarded entity. And it sounds mean, but it's exactly like it sounds. The IRS just disregards that you have an entity whatsoever, and they continue to tax you as an individual unless you ask otherwise. One of those other ways that you can ask to be taxed when you're a single member LLC is as an S Corp. So essentially, you're asking the IRS to tax your single member LLC under the rules of an S Corp instead of being taxed as an individual or disregarded entity. So why are S Corps so great? Well, there's a number of reasons why S Corps are great and why we are so obsessed with them here at Collective. Number one is going to be that S Corps don't pay self-employment taxes on their business profit. But there's a catch. So how it works with an S Corp is that S Corp election that we would file creates an employee-employer relationship between you and your business. Now that you technically have become an employee of your business, the IRS requires that you are reasonably compensated for the work that you're doing as a W-2 employee. So you set up what's called a reasonable salary. And at Collective, we can help you determine what that is. I always like to encourage everyone, if you are thinking of setting up an S Corp, please, even if it's not at Collective, discuss with a tax professional what your reasonable compensation should be, because it is a very complicated area of S Corp ownership. But once you put yourself on that salary, you have to pay payroll taxes on your W-2 wages. Payroll taxes are 15.3%, just like self-employment taxes, like those slides a couple slides ago that we looked at with the employer versus employee versus self-employed. So it's all just that flat rate of 15.3% for Social Security and Medicare tax. Half of the payroll taxes are going to be withheld from your paycheck, and half are an expense for the business. So again, we looked at this sole proprietor / single member LLC taxation where you've got, again, revenue minus deductions equals your net income. If it's positive, it's profit. If it's negative, it's a loss. That then flows through to your personal return. You pay 15.3% self-employment tax on that, and then income tax at your ordinary income tax rate. With an S Corp, as you can see, it looks a bit different. So let's start at the top. We've got our revenue. Again, just everything that we're earning from our goods or our services. And then you've got your salary. On your salary, that is an expense for your business. You've got your salary, you've got your payroll taxes of 15.3%, and then you've got your other expenses. Again, any software subscriptions that you have, business use of your home, mileage, any kind of travel, meals with clients, just run-of-the-mill expenses. That determines the S Corp's profit or loss. Again, the S Corp is a pass-through structure still, just like a sole proprietorship, just like a single member LLC. So everything there, your salary plus the profit, is going to flow through to your individual tax return. So again, the salary flows through, that gets reported as W-2 earnings, and then the profit from your business gets reported on your individual tax return as well. And then that is subject to income tax. So just like with the previous structure, all other income, household income, if this is your side hustle or your spouse is employed and you file jointly with them, takes into consideration all that income minus any personal adjustments, minus either the standard deduction or itemized deductions. So let's look at this with some actual numbers. So that way we can kind of see and visualize the difference between disregarded entity taxation and S Corp taxation. So this is kind of like a diagram that explains LLC versus S Corp on $145,000 of profit. The column in the middle left here is a sole proprietor or single member LLC, and the column on the right is an S Corp. Everything is going to be the same in terms of their gross revenue for offering their goods or services, what they're able to deduct in terms of expenses, retirement contributions, and then the net profit of $145K. The difference is coming into play with the wages, as you can see. The sole proprietor or single member LLC just is not set up to pay themselves a wage and receive any tax savings. So they have to pay self-employment tax at that 15.3% on their entire net profit, whereas the S Corp owner is able to establish a reasonable wage of $45K. So that's all they have to pay this 15.3% on now. Instead of their entire net, it's just on their reasonable salary. So instead of paying over $22,000 in self-employment tax, they're able to reduce this down to just under $7,000, saving $15,000 in the process. So that's a pretty substantial amount of savings. I could think of a lot better things to do with that $15,000. But as you can see, because it's still a pass-through, it's still going to be reflected on the tax return. So with the sole proprietor or single member LLC, the entire $145K in net profit is just considered pass-through profit, and that's how it's reported. With the S Corp, because they have $45K on their salary, they've got $100K in pass-through profit here. Both businesses for taxable personal income. So for income tax purposes, both businesses are still taxed on the net profit of $145K. So the S Corp does not inherently impact income tax, but it does help you save on self-employment tax. So I like to think of, the S Corp income in kind of two buckets versus a sole proprietor or single member LLC that would all just go into one bucket. It's all just net profit. S Corp income is characterized in two ways. In bucket one, you've got your reasonable salary. On that salary, you're paying both self-employment tax and income tax. And then in bucket two, you've got your leftover business profit, which is just subject to income tax. You no longer have to pay self-employment tax on that portion. And again, as a sole proprietor or single member LLC, you pay income tax and self-employment tax on everything. So it's just a way to kind of lessen that self-employment tax burden. Hopefully that makes sense. Again, if you guys have questions, please put them in the Q&A, and I'm happy to explain in more detail later. So let's talk about reasonable salary. Getting a salary through my S Corp is great, but how much do I pay myself? That's a question that we get asked a lot. And unfortunately, there's no exact formula that the IRS has given for reasonable compensation. It is what's called a facts and circumstances argument. So it really is a strategy that your tax professional can help with. They can help determine a reasonable salary for you that is going to align with your goals. It's going to put you in the sweet spot, so to speak, of being in compliance with the IRS, but also having optimal tax savings. So like I stated earlier, if you do have the idea that you want to go forward with an S Corp, even if you don't go with collective, please discuss this with a tax professional and get their help and their recommendation on this, because it's such a gray area. They've been arguing about this in court since the 1940s. So definitely talk to a tax pro. So how does the money work? So again, we've got the business income minus any operating expenses. You've got your payroll. The payroll is going to be a flat salary that we or your tax professional help you choose. Out of the leftover business profit, so the amount that's not on payroll, you take distributions. So as an S Corp owner, you still have full access to all the money. We talked about those two buckets. Bucket one is your salary that goes on the formal payroll. This is the flat salary we pick for you. We look for a number to get you to by the end of the year for the salary. Distributions are what's in bucket two, the business profit that you take draws or distributions of throughout the year. Distributions are meant to supplement salary. So you can take them whenever you want or need the money. The payroll, again, is going to be subject to those two taxes, self-employment tax / payroll tax at the 15.3% and income tax. Distributions are just subject to income tax. And then you have your reimbursed expenses. And that's something really cool that works really well with an S Corp. It's a really awesome benefit of an S Corp. It's called an accountable plan. So as an S Corp owner, you can actually be reimbursed for expenses that you would normally pay out of your personal bank account that are business expenses. So like we talked about, the business use of your home, you get a percentage of your mortgage interest or rent, your utilities, HOA fees, cell phone bill, all of that you typically would pay out of your personal account can go onto your accountable plan along with, say, mileage for your vehicle expenses. And then your S Corp can actually reimburse you. It's an employee reimbursement plan. They can reimburse you for those expenses. And then it's an expense for the business as well. So which structure is right for you? An LLC may be best if you're new to business, you don't have very many earnings yet. Say you're earning less than 60K per year in net profit, and you just want a really straightforward tax structure. You don't want the additional requirements of an S Corp, then an LLC may be best for you. It's still a great structure because you still get, number one, that liability protection, which is important to a lot of professions. You also get the infrastructure there. You get that tax flexibility, which is something that you don't have as a sole proprietor. You can't go from sole proprietor to S Corp. You have to have that eligible legal entity formed with the state. So with an LLC, you have that infrastructure, you get that tax flexibility, and then you give yourself more options. So that way, as time goes, if you're like, oh, I'm not making 60K yet, but maybe by October, I will be. And you set up your LLC now, and then by October, you look at your projections and you're going to make 80K and you want to be an S Corp, you can get on the phone with Collective and we can backdate that S Corp election for you to your LLC formation date. So you just give yourself more flexibility with an LLC. With an S Corp, it's going to be best for business owners who are earning more than 60K in profit per year. If you want to maximize your retirement savings, you have more flexibility with an S Corp in doing that as well. You can set up something called a solo 401k that allows you to contribute both as an employee and as an employer. And then you also want to make sure that you have enough cash flow to make payroll runs. And also, it's not on the slide, but I always recommend, that this is an S Corp is really good if this is something that you're going to be doing for the foreseeable future. So if you can see yourself running this business for the next year plus, then an S Corp is great. If it's really short term and you're just kind of, you know, doing some freelancing in between W-2 jobs and you're only going to do this for 3 months or 4 months or even 6 months, it may not be worth it because an S Corp is an investment of time. There's, again, a lot of more moving parts that you have to consider with an S Corp. So it just may not be worth it to enter into a more complicated business structure for such a short period of time. So that's also a consideration. So why start now? So now is the best time to start, especially if you're a sole proprietor. There's always kind of no time like the present as a sole proprietor. Every day that you wait is more money that you leave on the table because you can't backdate that S Corp election as a sole prop because you don't have that tax flexibility we talked about. So time is of the essence. If you're an existing S Corp, you get that full year of tax savings for 2023. If you're an LLC, you would get half of the year, or a sole proprietor, you would get half of the year of tax savings. Your taxes and your bookkeeping are going to be simpler because Collective is going to handle that for you. We're going to take the bookkeeping completely off your plate and we're going to do the taxes for your S Corp. So you don't have to worry about that. You can just focus on more so like the front of house of your business and we handle the back of house. You can also start the rest of the year with new money habits, making sure that everything is clean and in good shape. That way you don't have to stress about being behind on your bookkeeping. So how do I get started with an S Corp? The first step, again, would be to create that eligible legal entity with the Secretary of State. At Collective, we specifically work with single member LLC based S Corps. So we would create that LLC, file those articles of organization with the state, file any other paperwork that's required. We draft the operating agreement for you. We file the S Corp election, get your EIN, and then we have to register you as an employer. And that's really just so you can employ yourself. We just have to get you on a payroll account. That way you can pay yourself that reasonable salary. So we handle that. You get your setup tools such as your bookkeeping, your payroll software. You want to set up a business bank account in the name and EIN of your LLC. And that's for liability protection purposes for yourself. We get a lot of questions of people asking if they can just use their personal bank account. You really want it to be in the name and EIN of your LLC. Business credit cards, you can get those as well. So you really just want to make sure that you have everything in place. And then for ongoing operations for an S Corp, you need to file business and personal tax returns. So the S Corp tax process is a bit different than just a single member LLC or sole proprietorship. It has its own separate tax return, just like a partnership does, but the return for the S Corp is due every March. So that has to be filed before you can file your personal return. And Collective does prepare that for you. So you file the S Corp return in March, federal and state, and then you get a W-2 and a K-1 to use to file your personal return. You also need to file quarterly payroll returns and quarterly estimated tax payments. And then you need to file state paperwork like we talked about in the beginning, that annual report that most states make you file. You have to file that. You have to keep up with the books and any tax obligations. It really is best process to manage your books on a monthly basis. So to keep those really up to date and in good shape, federal and state estimated taxes, and then you need to ensure that your reasonable salary is in compliance with the IRS guidelines. So you kind of need ongoing reasonable salary recommendations from a tax professional because they could set it for you in the beginning of the year And then things could drastically change with your business. Maybe you get a new client, a new big client, and you're making way more money than you were in Q2. And now you need to adjust that salary or run an extra payroll. You really need support there from a professional. So, are you thinking about switching to an S Corp? Are you guys in? Are you not sure? I think so, but maybe just not yet. All right. So again, we've got these bubbles. They're back. These pesky bubbles. What is it like on your own without collective with an S Corp? All these bubbles are floating around. How do I set this up? I've got to register my LLC. I've got to get my EIN. I've got to file the S Corp election form. I've got to get on the horn with the state for probably 2 hours to get my payroll ID. I've got to figure out what bookkeeping software I want. I've got to get with a CPA to calculate my reasonable comp. What payroll software am I going to use? How do I even do S Corp specific accounting? What do I need to file with the state? How do I do my taxes? How do I calculate estimated taxes with an S Corp? Because those are different too, because you have withholding from your payroll. So that has to be factored in as well. And then of course, how does this affect my retirement? Things are different. The contribution limits are different. How do I get advice on all this stuff? And then with collective, again, it's just a cohesive one-stop shop. That's what I tell people is really, the main benefit of using our platform is everything is just in one place. You're not having to cobble together a bunch of different services. You're not having to DIY certain parts. You just get specific advice and support from a team of experts who are experts in small business and experts in S Corps. A lot of CPAs just aren't experts in self-employment. They're more so experts in wealth management, and those are two totally different universes. So at Collective, you just get a little bit more personalized attention and care. You're not going to be slipping through the cracks as often. You get support on not only the setup of the S Corp, but also just ongoing support with all of those additional moving parts. We handle the bookkeeping for you. We have our own proprietary bookkeeping software. We take care of that for you on a monthly cadence. We partner with Gusto for payroll. They're an amazing payroll provider. We handle your S Corp taxes, any state compliance, and then you get assigned your own member relationship manager with Collective, and they're a tax professional that was hired for their knowledge and expertise. So they're there to support you. You have unlimited access to that individual. You can do emails, you can hop on phone calls, and they can kind of give you some support on if you need, some tax planning, like tax strategy for your business. If you want, to get some more information on retirement plans or on health benefits, they can help with that too. So we are just fully inclusive in our support. Collective is available nationwide, and we work with sole proprietors, single member LLCs, and LLCs already filing as an S Corp. So wherever you're at in your S Corp journey, Collective can help and kind of pick up wherever you're at. Our main criteria is that most cases, we do want you to be above 60K in self-employment profit. So that's kind of our minimum recommended threshold. That's about our break-even point. It can be higher in certain areas, certain cities or states. And to get more information on that, you just want to schedule a call with our team, with one of our business advisors, and they can give you more specific information. But here's just kind of what you can expect your first year at Collective. Again, the setup, we're forming the LLC for you. We're dotting all the I's and crossing all the T's there. We're setting you up in our bookkeeping platform, Collective Accounting. we're setting you up in Gusto Payroll. And one of our fantastic onboarding accountants will actually run your first payroll with you, just to make sure that you feel comfortable. As far as monthly bookkeeping and financial support goes, we're going to do that again. Monthly cadence. Everything is going to be up to date. We're categorizing transactions. We're reconciling your accounts. You get a review of financial statements by an actual person. A lot of businesses just are using AI nowadays to review financial reports, and that's just not as accurate as an actual human that is an expert bookkeeper. And then we send you financial reports every single month. You as the business owner, we want you to be empowered to look at your reports and have a really clear picture of what's coming in and what's coming out, so that way you can make important financial decisions. And again, you get that team of experts that you can message anytime with any questions or advice. And then for tax purposes, we file those quarterly payroll reports for you. We calculate estimated tax calculations and reminders on a quarterly basis. We do the annual tax preparation for the business tax returns for the S Corp taxes. And as far as our fee goes for all of this, we have two options for you. We've either got a monthly subscription, that's just $349 per month, and there's no contracts, no long-term commitments. Or if you did want to sign up for 12 months of service, the cost for that is $35.60 per year. It does include a 15% discount. So it shaves off about $680 total off of the bill. If you're a sole proprietor, there is no setup fee. If you are either an LLC, single member, or an LLC with an S Corp election, it would be a $199 setup fee. That's just a one-time fee only. And again, it includes the monthly bookkeeping, all the software, the bookkeeping software, the payroll software. And yes, we are a deductible business expense for you. So as promised, we've got that special offer for you. Thank you for sticking around this long, guys. Really appreciate it. So our special offers, you get 1 month at 50% off. So the code for that is JUL10 W24. So basically July 10th webinar, the W is for webinar, tax year 2024. You can schedule a call by scanning this code here with me, with our team. We'd love to help. We'd love to talk more with you about your business and what's going on, see if we can answer some questions and if we'd be a good fit to support you. So that's the presentation. I think we've got some questions here. Let me just take a look real quick. Okay, and my email address is E as in Elizabeth, and then my last name, Mullins, M as in Mary, U, L as in Linda, L as in Linda, I, N as in Nancy, S as in Sam, @collective.com. Okay. Maria, if you don't earn over 60K and don't have the cash flow to meet payroll, then you probably just want to stick to a sole proprietorship until you get there. Okay. Cool. Hopefully some of these questions are also in the Q&A. I'm going to open that up right now. Sarah, it's not opening for me. Again, I don't know what it is. I'm clicking Q&A. I see that there's questions in there, but nothing is popping up. I don't know if you would mind copying and pasting those into the chat for me again, and I will get to everybody's questions. I'm just going to go through the questions in the webinar chat for now. Okay. Do you discuss when to choose S Corp or C Corp? So Jenny, typically we would recommend a C Corp for a couple of different reasons. If you are looking to raise outside funding, if you're looking to have more than 100 shareholders, or if you're looking to be able to issue more than one type of stock, like common stock and preferred stock, then a C Corp would likely be a better structure for you. We do just specialize in S Corps at Collective. So if you do have more specific questions on S Corp versus C Corp, I would encourage you to chat with either a local CPA in your area or a financial advisor to determine which structure would be more beneficial for you. If it does turn out that an S Corp would be better, then Collective would love to be a piece of the puzzle and support your business. How do I determine what is a reasonable salary versus a distribution for my S Corp? So Mario, again, that's something that you really want to chat with a tax professional about so they can make sure that the salary is going to be within that recommended range and be within compliance with the IRS. And then anything that's left over as business profit, you can take as a distribution, but you really just want to make sure that that salary is considered reasonable. What is the percentage of income tax that S Corp has to pay for the 100K pass-through income? So lady, you can actually look up the tax brackets for the current year online. And then it depends, that the tax brackets also depend on how you file. If you file single, if you file joint, are you taking the standard deduction or itemizing deductions? Unfortunately, there's kind of too many moving parts there for me to accurately let you know what the percentage for income tax would be on this webinar. But yeah, you can kind of just determine what your ordinary income tax rate would be on your net profit plus any other household income. If you, just Google those tax brackets, you'll see the info there. You just choose your filing status, and you can kind of line everything up. Okay, Selena, I have a licensed tax preparer and I have no idea what's reasonable compensation. We aren't through those calculations. Yeah, we hear that a lot, actually, that, somebody's CPA set them up as an S Corp and they're not running payroll. So it's just kind of going back to, this isn't a lot of CPA's area of expertise. So things fall through the cracks quite commonly, unfortunately. Will the IRS use U.S. labor statistics to determine if I'm receiving a reasonable salary? Do I need a reimbursement company policy to receive reimbursements? So no, they're not necessarily going to use the labor statistics. That doesn't really equal reasonable salary. There's more factors that go into it than that. And they do take into consideration that you're likely not going to be able to afford to pay yourself what a major corporation would be able to afford to pay you for the work that you're doing. It's also kind of a return on building your business and contributing to the economy. As far as a reimbursement company policy to receive reimbursements, no, you don't need that with an S Corp. You just need your accountable plan. Can I go back to past years and refile taxes as an S Corp? Randy, yes, you can. You would need to file that S Corp election. I believe you can go back 3 years, and then you would need to amend those prior years' tax returns. So it may be worth it for you to do that financially, but you would want to talk to a CPA in your area and get them to do a projection of what your potential savings could be if you do go back a couple of years and refile as an S Corp versus what they would charge to do that work. Now, Collective is not going to go back that far. We do have very strict boundaries in place in terms of how far, we will do a retroactive S Corp election, because it does come with a very large administrative burden. And a lot of CPAs will charge a very hefty fee. So especially if you're going back years, it may not be worth it after all is said and done, but it could be. You just want to talk to them and see what their fee is going to be and how much they'll predict that you will save. The Augusta rule. So that is something that you can do as an S Corp, renting out your home to your business for 2 weeks. I believe it's just for S Corps, Harold, but I'm not 100% sure on that. Stephen, what if you already have an EIN and existing LLC? That's perfect. So if you already have that, you've already got your infrastructure, you would just need to file that S Corp election to transition your business to an S Corp. Harold, can I start as LLC or Corp? Yes, you can have either underlying legal entity, either an LLC or a corporation, and then elect to have either one of those treated as an S Corp. However, collective does only work with single member LLCs. Venkat asked, does S Corp vary from state to state? So yes, certain states have different requirements for S Corps. Some states recognize them, some states don't. Yeah, the states are like the wild, wild west. They're all different. I wish that they just followed like the same rules as the IRS. Things would be a lot more simple, but they've all got their own thing going on. If I filed my 2023 taxes as a sole LLC, can I go back and amend the filing as an S Corp? So Marcia, yes, you can. You would need to do that with your accountant. Again, see how much they would predict that you would potentially save by filing as an S Corp and just weigh that against how much they would charge to go back and do the filing for you and amend that tax return. They would also need to file the S Corp return for that year too. So they would need to file Form 1120S. That's the S Corp return. And then amend your 1040. So they likely will, charge. I've heard of kind of hefty fees being charged to do that. So you just want to make sure that it's worth it. Jenny, yes, that's correct. 3 years. But again, there's all those fees involved. So you just got to do kind of a cost benefit analysis and see if it would be worth it. Lisa Hill, partnership. So yeah, a multi-member LLC can be taxed as an S Corp. A partnership is already a different type of tax status with its own tax form. Okay, I already answered that. Is it possible to receive a transcript or recording? Yes, Sarah's going to send those out to you guys within 24 hours to everyone who registered. Jenny, yes, the $349 per month does include the tax return for the business. Let's see. So Carrie, you can go back 3 years, but that would have to be done outside of collective. Wendy, do you deal with offshore setups as an American looking to buy businesses or invest offshore? What are the options? So we don't deal with any offshore setups. We deal with domestic businesses only. As an S Corp, you do have to be either a US citizen or permanent resident. So you said you are an American. Typically, you want them to be a domestic business. We don't work with any businesses at Collective that are paid in non-US funds that have any type of foreign filing implications, because that does add complexity. And at our price point, we just really can't get into that. You can be a consultant with an S Corp, absolutely. I think something like over probably 60% of our client base are consultants. And I think 96%, I read a statistic, of S Corps are owned and operated by one single person. So it's perfect for small businesses. Okay. When you ask for a loan, home or personal, when they ask for your income, do you report only your salary or also the income from your LLC? What about retirement plans for expats with an S Corp? Any recommendations? So yes, when you're looking for lending, an S Corp is actually a really favorable business structure. You would report your salary, but also, the remaining income from your LLC, and Collective can help with that. Most accountants will provide, it's called a comfort letter, that kind of explains to the lender how your income is categorized so they can understand it, because even though it's 2024, a lot of lenders still don't have a very good understanding of self-employment income. Retirement plans for expats with an S Corp. I'm not too sure about that. I know typically the recommended retirement plan with an S Corp would be a solo 401k because of the flexibility that it provides. But if you shoot a question or an email over to the email address Sarah gave, the webinars at collective.com, we can look into that and shoot you over some resources. Jenny, do you help us set up a 401k insurance and other benefits? You can definitely talk to your member relationship manager about that. We don't actually facilitate those services, but we can definitely help answer questions and provide you some support. I formed my LLC in May and I filed for S Corp. Can Collective backdate my taxes from January 1? So, Anna, unfortunately not, because you didn't have that LLC formed as of January. You just formed it in May. So the S Corp election date cannot precede the LLC formation date. So, because it has to be anchored to that legal entity. So the LLC, the S Corp election date would be the furthest we'd be able to go back, or that you would be able to go back, would be the LLC formation date. But our cutoff for backdating earlier in the year was June 30th. So right now we're only backdating LLCs to July 1st. Jenny, I don't think we sent out a copy of the slideshow, but Sarah will send out a copy of the recording. What if I'm already set up and ready with my S Corp? Well, we'd love to work with you then, Homer. I would schedule a call with this QR code. Just schedule a call with us and we can see if we'd be a good fit to support you. And then if you're already set up, then possibly, you know, your new business advisor may be able to waive your setup fee. If an LLC is a legal business structure and an S Corp is a tax classification, when should I file as an LLC, S Corp, corporation, or another classification? So you could form your LLC whenever. It's not going to change anything for you for tax purposes, but it will give you heightened legitimacy, and it's going to also give you that liability protection. I would wait to form the S Corp until you're over 60K in net profit and have the cash flow to run payroll. Yes. If I'm self-employed, business is not an LLC, and I did not make any profit for the first few years, so I still need to pay myself as well as a self-employment tax. Will it make a difference? 15.3%. So I didn't make any profit for the first few years. I still need to pay myself. So no, if you didn't make any profit, then there's nothing to pay yourself out of in terms of salary. Will it make a difference if I'm on a higher bracket on my personal taxes? Yeah, so the 15.3% that's completely separate than the income tax. The income tax is most likely going to be higher than that for most people. So an S Corp is, you know, it's great for high income earners, that it can help you reduce that self-employment tax burden. Yes, your S Corp needs to be registered for unemployment tax. You pay those in a quarterly basis. So if the business profit after the expenses is negative, then an S Corp just wouldn't make sense for you right now. That would be a loss. And you want to have a net profit of over 60K for an S Corp. Okay. I'm the only employee. I pay myself everything after expenses. Should I do S Corp and payroll? So that depends, Sherry. You know, like I said, 96% of S Corps are owned and operated by one individual. It just depends on how much you're making, if an S Corp is going to make sense for you. But It is a great way to kind of mitigate some of those self-employment taxes. And you do have that payroll requirement with an S Corp. I have a separate building for my office. I pay myself rent. Okay, so you own the office building and then your business is renting that from you. Okay. My salary / wages is based on business income. Does it have to be a flat salary plus distributions for an S Corp, or can it be salary plus commissions plus distributions? So it's typically just going to be salary plus distributions for an S Corp. If you do, earn commissions from your client, that's okay. And those would just be classified as such. Let's see. Do you recommend S Corps for real estate agents? Absolutely. We have a lot of members who are real estate agents that utilize S Corps. It's, again, just a great way to help save on those self-employment taxes. If we file as an S Corp now, we actually get a full year of 2023 tax savings. I didn't understand that slide. Yeah, I apologize. That's not accurate anymore. You would get half of the year of tax savings unless you're an existing S Corp. Then you would get the full year. Solu, yeah, we only work with single member LLCs. What would be the difference or benefit of S Corp versus C Corp election for LLC? So C Corp is a completely different entity. It's not a tax status like the S Corp is. A C Corp is a legal entity like an LLC. Typically, if you're just an individual offering professional services, an LLC is going to be more straightforward and be just fine. We would really recommend a C Corp if you're looking, again, outside funding, if you need to raise that, if you need to have more than 100 shareholders or be able to issue more than one class of stock. Remember, C Corps are subject to double taxation. So you can have a C Corp and elect to have that tax as an S Corp, but then they're basically the same thing. You just need more requirements with that. You have to have a board with a C Corp and record minutes. Carrie, you can go back 3 years. You just need to find an accountant willing to do that because they're going to need to file S Corp returns for those years. So you'd have to pay for 3 years of S Corp returns, which the prevailing market rate for those is typically about $1,500 for the 1120S. And then they would also need to amend your 1040 tax returns for those years and then do the S Corp filing as well. So it can add up to be a pretty penny. Thank you, Harold. What is the best state to file within the Secretary of State? I heard Wyoming is. So yeah, that can be a little tricky in terms of where to file. At Collective, we do have a policy that we register businesses in their home state. So where you're living and working, and that becomes especially important with an S Corp because you are paying those payroll taxes. You have to be registered as an employer in your state, paying payroll taxes and unemployment taxes in your state. If, say, you live in California and you register in Wyoming, you're filing taxes in California and they see that you have self-employment income but no business registered there, there can be some penalties and interest. In extreme cases, they can suspend your right to do business in your home state until you're registered there. So then you end up having to foreign register in your home state, and then you're dealing with essentially maintaining 2 LLCs, 2 annual reports, 2 annual fees, and it just becomes more of a headache than it's typically worth. So we just file LLCs in the home state, but you may be able to find a CPA who would register you out of state. We tend to be a bit more conservative because compliance is very important to us. Let's see. So Selena said, you're using your phone and can't scan the code. What's the phone number? you can just email us at webinars@collective.com or just go to collective.com and you'll see a button that says schedule a call. Oh, and I think Sarah just linked it there. Thank you guys. Share more about liability protection with an S Corp. Sure. So it's the same as with an LLC. You just get that inherent liability protection with your LLC, your limited liability company. That way you're considered a separate entity from your business. So if somebody is going to come after you, they aren't able to go after your personal assets, just the business assets. I want to understand the savings of 15K in the example. Did you put in consideration the taxes on the W-2? So, and that was just showing the self-employment tax savings, not income tax. So there would be income tax just at your ordinary income tax rate. And that's going to vary from individual to individual, depending on how much money you make and how you file. Is there a way I can go back more than 3 years? No, unfortunately, that's the tax code. The preceding years were strictly everyone, including myself, was paid a 1099. Is there a reason/way to switch to an S Corp in the previous years? So yeah, I mean, if there would be a savings, then you can go back again and you would have to amend your 1040 tax returns and refile those S Corp tax returns. So again, it can be quite pricey to do so, but you'd want to just talk to a CPA in your area that would perform that service and just see how much they would charge and do a cost benefit analysis. Okay. Hi, Swati. I think I answered those. Let's see, let me do it again. Do I still need to pay myself as well? So yeah, again, if there's no profit, then no, you don't need to pay yourself. But if there's no profit, then an S Corp isn't an ideal structure for you. You want to make sure that you're over 60K in net profit. S Corps are great if your personal taxes, if you're in a high tax bracket, because it can help save some of those self-employment taxes. And yes, we do need to register you as an employer so you can pay those unemployment taxes. Claudia, yes, we will send that out. Sarah's going to get this out within 24 hours. And I think that's all the questions, guys. Thank you so much for attending and for your engagement with all the questions. Please schedule a call with us so we can chat to you more, and best of luck and continued success to you guys with your business endeavors. Thank you so much. Take care.